What's going on, everybody? Julian here from jlewistrading.com doing a quick market review, and it was a bit strange out there today. Interesting play on Tesla and Beyond Meat. Both of them, in my personal opinion, have been hyperextended on this daily chart. You can see that Tesla has absolutely just completely lifted off. There's a bit of a meteoric rise right through here from this 341 level up into this 518 level within the last 6 weeks. Like, it's been an insane move to the upside on Tesla. And, we have had people in the community that have been trading Tesla, myself included, get in there, do these little nickel and dime day trades and play some of that volatility. And it's been fantastic. But the fact of the matter is, I've been starting to feel a little bit uncomfortable because I'm not seeing the same buy signals. And I don't like buy signals in an overextended situation like Tesla. So I've been waiting on Tesla to signal me short. And the fact of the matter is, today on my options list, it showed up as the top mover to the downside to short. Last night I was talking about this in Ask a Trader. I thought that might be some more room for the upside. There was a gap over the last couple of days, and price action had rallied and set this ascending triangle, symmetrical triangle, and price action has started to dip. And I said it's going to be a binary situation where resistance breaks, price action moves, support breaks, price action moves to the downside, and then starts to trigger these lower levels. And I was looking to short this today, but when I came to the 15-minute chart, one thing that bothered me is that price action had just slightly dipped below and then started to chop through that 20-day simple moving average, and it was holding, although there was some room, it was holding the 200-day simple moving average, and that for me isn't necessarily a sell sign. So I stepped away from Tesla. I'll be watching it, but there was nothing there for me. BYND, Beyond Meat, same thing. Over the last little while, this thing has just spiked. 2 days ago, it had crazy movement, and it spiked all the way up to 134, and it hit a level of resistance. A very, very structured position, I would say, too, because you've got structured support from back in the day that it held very, very well. And price action rallied straight into it and then created this topping tail and rolled over. Again, hyperextended play. It's moved up on a string. It's currently at like 75%. Over 9 sessions, insane movement. So for me, I thought, okay, this thing is going to pull back. We're going to see a little bit of a pullback in the demand. And again, structured this thing out, went over to my 15-minute chart, and it's been trending very, very nicely. There's a big disconnect between that 20 and 200-day simple moving average. And I wanted to short this thing today intraday. But again, because of its positioning with the moving averages, there was nothing there for me to do. Also, Luckin Coffee. This was my top mover on my list today, and it ended up failing. But what crept up behind it was CGC. And what CGC actually ended up doing was it just kind of chopped through on that 15-minute chart. But it did hold that 20-day simple moving average and that 200. And I thought that there was maybe an interesting zone right through here that I might want to take a shot at. When the bell rang, I got down on my 5-minute chart, and I started to look at the top of this first candle. And price action just kind of stepped below. But what I did find interesting is that when it set this sort of indecision candle, the next candle that printed was an inside candle, but the low was a little bit higher. So I thought to myself, what happens if we can take out the top of this candle? And right through here, I decided, you know what, I'm going to take this thing long. The lows were getting higher. There was just bottoming tail after bottoming tail. It eventually broke out. It took out the short-term high of day and then spiked right through here. And actually, this topping tail hit the bid on my options that I was looking for, and I was out of this thing. There was a very, very short hold. The unfortunate thing is it pulled back, held that 20-day simple moving average. I didn't think to get back in because I was out of the market, but you can see that there was this position right through here that I missed out on. But the fact of the matter is my target for the day on CGC was hit, and it was a decent enough trade. Now, looking at CGC on a daily chart, it's looking like price action is going to probably potentially run from $24 and maybe find some if there was going to be some resistance, we would have seen some right through here, which we did, but price action broke through. You can see that this bar actually hit 23.37 from behind, but took that previous structured support level out and closed above. Today confirmed that that close above that breakout level and has now steadily moved up. The volume and participation level is pretty darn nice. As it stands right now, there's really nothing standing in the way of CGC moving all the way up to at least 28, close to $29. There's a small window that could get closed up through here, and we could see price action move up to 31.29, which intersects with that intersects with that 200-day simple moving average. So this is something that you're going to want to take a look at. If you're swing trading this, I would say that these are some levels that you're going to want to be looking at. I mean, one could say and speculate that there's some sort of really sort of avant-garde looking inverse head and shoulders right through here, complex head and shoulders, and could have a nice play out. But it looks like there's a bit of a basing pattern right through here, and a reversal maybe is happening from 23.30 into that 28.80 level. So price action could very well come up through here and find some resistance. So if you are swing trading it, I would pay some special attention to this 28.89 level. If it can push through, I'd pay attention to 31.29. If price action actually get through that 200-day simple moving average, I think that there might be a lot of eyes on CGC because it's gotten beaten up quite a bit. Now, I'm going to put this out here. I do like Fibonacci, and I am going to use this. I am going to take down this structural support level, and you'll actually see that one of the levels that I picked here, 31.29, is actually a light pullback, or light rally point rather, at the 318, or the 382, pardon me, 382 Fibonacci pullback level. So there is a possibility that price action could rally all the way up into this level. If it holds that level and can move past that, who knows? Maybe we're going to challenge a reversal. I don't know. I'm not going to speculate. But there are some levels that are high probability that CGC could potentially run up to. So the 382, definitely a level which is going to interject with the 200-day simple moving average. But I still would, for good measure, watch 28.89. I really like structural levels of support and resistance, but I also like using tools that are widely used, and I love using the moving averages, and I try and put together a thesis that encompasses everything, because then you take in other camps of traders that are trading very specific things, and you sort of cover everything at once. So those are the areas that I'd be looking to watch. Hope some of this has helped. If you have any questions, info@jaylewistraining.com, or you can hit me up in chat. Thanks for watching.